A very good afternoon to you. Asian stocks traded mixed, with the Nikkei retracing some of the record gains it made in yesterday's trade. Market players are looking to the US for expected rate cuts, given poorer than expected labour data out last week. Currency and bond markets, however, were said to be on edge. The Nikkei share average declined by 0.42%. The Hang Seng index rose by 1.2%, while the Shanghai Composite Index lost over 0.5%. US markets closed in positive territory yesterday, with the tech-heavy Nasdaq hitting a record high. The expectation of an interest rate cut from the US Fed Reserve next week was said to be a major driver of sentiment, with expectations that the quantum of the cut could be as high as 50 basis points, with analysts not expecting US CPI and PPI data scheduled to be released later this week to dramatically alter the interest rate cut expectation. The Dow Jones Industrial Average rose by 0.25%. The S&P 500 gained 0.21%, while the Nasdaq Composite Index climbed 0.45% to register a record high. Looking at the local market, we see that the all-share index is up 0.8% at 103,609 index points. Looking at the currency, we see that the rand is trading at 17.46 against the US dollar. That's a bit firmer relative to major currencies, 20.53 vis-a-vis the euro and 23.71 against the British pound. Gold is trading at $3,650 an ounce. That's reached an all-time high. Platinum is trading at $1,393 an ounce, while Brent crude oil is trading at $66.35 a barrel. All right, let's get into it now with Fahima Adia. She's a senior equity analyst at Momentum Securities. Thank you so much for joining us, Fahima. So while market players are expecting a Fed rate cut next week, they still have to digest, of course, that CPI and PPI data. And there are also concerns about the 10-year US Treasuries. Perhaps you can elaborate on what those issues are.
Good afternoon, Nambu. Thanks for having me. Yes, so I think it seems to be having more of a positive impact on global markets. The fact that we did see the US non-farm payroll data that was released on Friday has had a positive impact on the market since then. And I think the general labor market data has been rather weak in recent months, and that has increased the expectation of seeing a rate cut come through in the next week. And then, of course, we do have the US inflation data for August that will be out this week as well. And I think depending on that reading also, it will influence the Fed's decision on the rate cuts in the next week. But looking at US Treasuries, we are seeing yields there fall due firstly to the expectation of the rate cuts, but also there are concerns that the economy is slowing because of the tariffs and the weaker labor market. So that does have investors fleeing to safer assets such as your US Treasuries.
Well, as you mentioned, safe haven assets are a big deal right now. So gold has flirted yet again with another all-time high, and there appears to be no stopping it. I suppose this is an indication that people remain quite concerned about the uncertainty going into the future.
Yes, I think there's a couple of factors influencing that. The uncertainty, of course, is a very big one. The most recent issue has been that ruling in the US court that tariffs are illegal. So we'll need to see what happens at the Supreme Court, but that is causing quite a bit of uncertainty for investors. And then other factors is the upcoming interest rate cuts in the US, also the weaker US dollar. So generally gold tends to perform better in lower interest environments because it doesn't actually yield any interest. And then just taking a longer term view, the main driver has been global central market demand, particularly countries like India and China have really increased their gold reserves in recent times, trying to diversify away from the US dollar. So I do think this is something we'll continue to see increase in the coming years.
And then looking at the local currency, we know that it's not driven by one single factor, but we've just had the GDP print come out up 0.8% for the second quarter. To what extent has that driven the local currency and any other assets?
Yes, so it's looking quite positive. I mean, it's a decent increase from the first quarter, also beating economist expectations. I would say, the financial sector is probably more sensitive to things like economic growth. So we are seeing some modest gains in the banking sector. But looking at the rand, like you said, there's a variety of factors that generally influence that. So I think it might be having some impact, but it's the biggest factor actually impacting the rand has been the US dollar weakness on the back of those imminent rate cuts and also the weaker labor market.
And then lastly, Anglo-American, which recently fully divested of its platinum play, Valterra Platinum, and an outfit called Tech Resources, announced that they're embarking on a merger of equals, which seems to give Anglo-American greater access to copper. How significant will this deal be if it goes through the regulatory hurdles for both parties?
Yes, I think it's quite significant. The market's quite excited about it. Anglo-American's share price already up about 10%. And if it does go ahead, it's going to create one of the biggest copper producers in the world. There's some very large synergies there between the two. And production is expected to increase by about 10%. So copper, of course, is a metal that's been in huge demand given the renewable energy transition. And they've said that this is going to be a merger of equals. So even though Anglo's is larger, both entities really do bring strategic value of equal significance to this merger. So after this, it looks like Anglo shareholders will hold about 62% of the business, while the Tech shareholders will hold the remaining 38%. And another feature of this is that the management teams will be combining. So it looks like Anglo's CEO will lead the company, while the Tech Resources CEO will step into a deputy CEO role of the group.
All right. Well, we'll watch this space very closely to see developments there. Thank you so much, Fahima, for your time and insights. As always, that was Fahima Adia. She's Senior Equity Analyst at Momentum Securities.